Dzień dobry
Good morning, ladies and gentlemen. I'm very pleased to be able to welcome you to our results conference to present the results of PKP Cargo Group as of Q3 2019. Today, we're joined by the management board, slightly smaller number of the full management team. We're joined by the CEO, Mr. Czesław Warszawiecz, Mr. Leszek Borowiec, who's the CFO, Grzegorz Fingas, who's responsible for trade, and we also have our board member responsible for employee affairs. Today, we're not joined by our COO, who's presently in Gdańsk at the official launch of the link with China in our terminal in Gdańsk. And so we will actually deliver cars along this link, vehicles. So please contact our press spokesman, Mr. Krzysztof Los, and I'll ask the CEO, Mr. Czesław Warszawiecz, to go ahead and take the floor to deliver today's presentation. Thank you very much. I'd like to welcome you very cordially to our quarterly conference. You know our results because we endeavor to be transparent as we promised some 2 years ago. And so we treat this very seriously, responsibly. We treat our shareholders as our partners, business partners as partners. And so we don't think this earnings report is a surprise to you. Perhaps we won't dwell so much on the figures that are written in the presentation we've conveyed to you, but we're at your disposal to respond to any questions you may have concerning specific details. Perhaps I'll touch upon, however, the key measures we've undertaken and executed year to date, as well as in Q3. We'll try to tell you a little bit about what awaits us, what this position of the company is, and what you should expect. At the outset, I'd like to talk about the market context because this determines and drives our operations. So we have sometimes more freight, less traffic. We have the global economy, the European economy. So if we look at our main cargo over the first 9 quarters of this year, if we look at coal and solid fuels, because the power sector, perhaps we should close the window because it's a little bit noisy here. The power sector had stocks of energy, so coal from the previous period from last year, and so the statistical data speak to this. When we look at the freight traffic, which had fallen by 6.5%, and we can say that we experienced a more or less similar dip. So this is linked to the market. So we can say the market is stable. It's falling because of what's happening in the Polish power sector. That's one sector. Another big sector is what's happening with aggregates. I've talked about this with you in the past because we've seen lesser demand compared to the previous year. Whereas if we look at the previous years, then we can say the amount of traffic of freight in the first 8 months of the year for aggregates. This is the data that's available that we get from the transport office. Perhaps the structure is not changing so much, but we've transported some 15.2 million. And so this is similar to what we did in 2017. In 2018, there was less because, as I mentioned to you, in 2018, we had much greater demand, extraordinary demand from the market. So you can say that we've come back to the level that we had, to the level from before when this major demand spike took place. So if we look at the Roads Authority having announced that there was going to be more investments in roads construction And so starting probably next year, we should count on greater demand showing up at the turn of the year. So we're talking about a shift, a time shift of the investments that had been announced and not a loss of those investments. So the market situation for the freight market has been affected by the Mittel's decision to shut off the furnace in so this means that we haven't lost a client, we haven't lost the market, but because of corporate decisions, perhaps at the European level, as a result of certain directives and things that are being phased in by the European Union. So that's one of the reasons why this decision has been made. So in aggregates, we haven't lost the market. It's just a time shift. We've had good results. If we look at intermodal freight, so in Poland, we can see very dynamic growth. After the first 8 months of the year, we can say that the growth was in excess of 15%. So our growth also took place. It was a little bit slower than that. So after the 9 months of the year, it was 8%. It was a little less than 8% at 7 months. And so if you look at the difference between ourselves and the market, there was a lack of decision in previous periods in terms of the ability to handle this freight, to be able to handle much more. And so we've paid the price for having not made the decision in the pace, because we could have done more, but we didn't have the proper resources in order to be able to field that. And that's why we've made the decision to buy some intermodal cars. Wagons, we're utilizing EU funds for that purpose. So 1,220. So we're doing some modernization that's co-funded from EU. Then we have the container terminal in Maloszewice and the plan to purchase 5 multi-system locomotives for intermodal freight. So if we look at intermodal, we believe this to be a major specialization, and you know our strategy. We've introduced our strategy to you, and this is one of those areas where we're focusing our efforts quite strongly. We see the upward potential. The market month in, month out is confirming that, even as the market conditions slide down in the European Union, we can see that demand has grown. The Polish economy has been expanding quite strongly, and this will boost growth on the local market in the ports. So if we look at intermodal transport, we can say that the ports are driving this process, and that's why we welcome the investment plan to have an open port in Gdynia, and the decision to expand harbor capacity, port capacity in Świnoujście as well as in Gdańsk. And so this should lead to greater flows. And that means that some of the cargo that flows into other European ports may be flowing into the Polish ports, and then we'd like to be able to distribute that cargo further. So we're building our integration position with respect to terminals. So we want to be a logistics partner, and that means that our offer has to have door-to-door delivery elements incorporated. And so you have basically the transshipment as well as storage. We have terminals that are very important. We have 3 times less capacity of terminal capacity per 100 kilometers of rail lines compared to Western Europe. And so these infrastructural investments will be made to ensure at such a pace to ensure that we're going to be competitive, to be able to deliver at a good price from one spot to another, the products, the cargo that our customers want to have delivered. And so you could say that we are in the process of integrating our terminals. So 2 of them have formally been merged, so in Maloszewice and Medyka. So this process will be completed next year, and so then the remainder of the terminals will be incorporated. So managerially speaking, so the management team there is ensuring that all of this is jointly managed to augment our competitiveness. These are things that I'm focusing on because this is quite important in terms of our strategy and the product that we offer, because we continue to hone our position. And this is all part of our acquisition activity, M&A activity, which we've communicated to you today. We're talking about the acquisition of 2 entities on the intermodal market. We're talking about Hatrans, and I think it has 3 entities in Romania, and this is a matter of becoming part of the overall intermodal transport network. And why do we want to do this? On account of the market expansion, the market position. The key element was long-term contracting. So, for example, if you look at coal, it was a few years, 2-3 years now, the contracting is on an annual basis. And now the market, having in mind the flexibility of this freight traffic, well, the market anticipates that we'll have very flexible responsiveness also in terms of timing. Sometimes it's a month in advance or a few weeks, sometimes a few days in advance. And so we are following a policy of building our operator chains to make sure that we're going through the major economic centers of Europe and Western, Eastern, Southern Europe. And so that's why we're cooperating on a partnership basis with our colleagues from German transport sector, or the Italian, Lithuanian, Ukrainian, and Belarusian traffic or freight traffic operators. And so not only north, south, and east, west, into Western Europe and into Poland, but combine east and west, and not only all the way to China, but with Adampol, we're going to have this train that's going through Chan, which will go through Maloszewice. So we're actively participating in the development of intercontinental transport, but opening up this type of channel is very important for us across Europe and throughout Europe. And so this is our response to the change. These are changes we are making and we want to make in the near future. And this is something we want to invest in. So our activities, perhaps some specific figures, maybe you have them in mind. Over the recent 3 quarters, we've generated a result. Our EBITDA result is 713 million zlotys, having in mind adjustments for IFRS 16. So this is the biggest EBITDA result we've had outside of 2018 from the point when we went public. So this is the highest EBITDA we've had, and so our net result was nearly 100 million, some like 99 million zlotys. In the quarter itself, Q3 alone, our EBITDA was 263 million, and this was basically comparable, incorporating IFRS 16. It's comparable to the result we had last year. Our net profitability in this quarter was 4.5% in this quarter, and it was 2.7% on a year-to-date basis, so it's pretty decent and stable. Today's EBITDA result is quite similar to our capitalization. This shows how much potential resides in this company and the capacity we have, because the current share price doesn't correspond to the strength of this organization, and in terms of who we are, in terms of our stability, our ability to grow and develop, the company's position is quite stable. So if you utilize an accounting assessment methodology, it's 3.5 billion. So it's some 3-4 times larger than the capitalization. If you look at the cash we have on our bank account, it's 187 million zlotys. So this financial stability that the company has will translate into further expansion over the last 2 years on average. If we look at the forecasts that we've delivered, our EBITDA, our annual EBITDA is equivalent to our market capitalization, whereas companies in other industries, so if you compare us, perhaps this is just a way of picturing the inadequacy. So if you look at 900 stores in Dino, the capitalization of these stores is worth more than half of the Polish power sector. And so this ratio is some 20 times. So I just want to talk about the stability and of this company. And so you probably want to post some questions about this. In terms of the hard data outside of the market itself, it's worthwhile to mention that during this period, we've looked quite strongly at the challenges we've scrutinized, the cost challenges we face in terms of what's going to happen. The main cost we have, this is the employee benefit cost. And so the situation on the market will not be such that we'll actually lower wages if you look at minimum wage hike. And we're looking at this quite strongly. This is a challenge we face. We do see, and we are working on this above all. If we look at some of the inefficiencies we have, we'd like to counter them, eradicate them. So we're analyzing this to make sure that this happens. So we also look at productivity to make sure that our trains run better. We want to reduce the cost. We want to automate and digitize processes in freight handling. And so this lower our OPEX. I think we're far along the path of computerizing the overall process of handling freight and on a pro-client approach to make sure that our clients could have information access 24/7 about where their cargo is, loading, unloading, things like that, and also to be able to release some of the resources and therefore shed some of the costs of transport management as a program enabling us to manage the overall supply chain of our major products is something that we're working on very strongly. And I hope that next year this is something we'll be able to accomplish. So as I listen and hear and look at the challenges we have on the revenue side, the top line side, the market side, we're trying to solve them on a dynamic footing. As we incorporate market trends, so looking at intermodal transport, integrating all of our terminals. We also want, jointly with colleagues in Kosznica, have a new terminal, and then we have the intermodal division. So it's not only about the terminals themselves, but transshipment as well as storage. So we're building an organization capable of delivering the best freight handling functions as possible, and we're working on our major cost items in order to solve some of those cost-related challenges, to rationalize our resources and to right-size our resources. So if you look at the transport of aggregates, we need to streamline that and handle more. So intermodal growth on the Polish market should move along at a clip of 15%, and so also stable transport of solid fuels, including coal. Perhaps this would be a kind of a steady decline. These are some of the major elements, drivers that had and continue to have an impact on our operations. And one of the things that awaits us as I wrap up this recap of the top line and cost-related items, that the company has a very stable financial position, strong fundamentals. The outlook portends strong growth. So I'd like to thank you for your attention, and we're now ready to field any questions you'd like to ask about the details, specifics of this presentation, or anything that I've said to you. So I'd like to thank you very much for your attention for this part of the presentation. So we'd like to encourage you to pose any questions you may have at this time. I have a request for you to comment on the results of your subs. You can see in Q3, the subs made a major contribution. Could you tell us a little bit about what that contribution is and what we should anticipate in subsequent periods? Maybe I'll begin. My colleagues might want to add something. At the most recent conference, I talked about this, but we were talking about the improvement of operations at AWT, Cargo International. This is one of the things that we want to have. We want to make sure that we cooperate within a group and we identify with that. The most important thing is to exploit the synergy effect, the synergies, and we want to extract as much as possible here. So PKP Cargo International is generating profit at all levels. And so we can say that the organization is pretty well structured. There's a bit of inefficiency that has been offset. Above all, on the cost side, I think we should have more visible improvement next year. So some of the main products that we are carrying, we should see move or shift from being sort of a carrier of coal along sidings to being a carrier of intermodal transport to a greater extent. And so if you look at the impact exerted on our results, this was done by PKP Cargo Interconnect. We received a refund of VAT, and we also won basically a court case in terms of the VAT fraud carousel. So this was in PKP Connect. And so the other elements were stably delivered by our various subs. And certainly if you look at transshipment in Medica, we also see Mittal turning off its furnace. But we can say that the results of the subs in the group are very strongly in the black. And so our plans have been achieved, and this confirms that we're capable of being more cost-effective, delivering better results. And so we work together as a group. And so if you look at the business and commercial ties, we're looking how to exploit them and lower cost by centralizing, eliminating functions that are somehow redundant, duplicated. And so we want to utilize better the resources we have. So to sum up, PKP Cargo Connect and PKP Cargo International were the major contributors to the consolidated result. Would that be the proper assessment? If I remember correctly, in these two areas, we also had very good results, robust results from other companies, other subs. So those things were also adding positive results. But in Medica, the transshipment, so we had slightly lower revenue there. But in brief, we could say succinctly that these are the companies I remember. So following up on the standalone financial statement, at the most recent results conference during H1, you said the company will undertake work at the end of the year in terms of the motivation incentive system that you want to modify this system. We're now at the end of the year. Could you tell us a little bit about what's been done? What are the plans? Excuse me for interjecting. We're thinking about the incentive component. We can see that the salaries are stable, growing year on year, but we're now in Q3, and you can say that the freight turnover is down by some 16%. Here, we're focusing, based on previous statements, on offsetting inefficiencies. That's the first thing. And we want to utilize the reserves we have, and there's more room for us to improve inefficiencies. This is something that we're focusing on as an organization. If we look at the incentive system that we're working on, regardless of how we want to call it, compensation system, incentive system, we're quite far along the path of thinking through this. It has to be aligned to the size of our business, who we are, and we have to have in mind the impact that individual units have on the results. Because sometimes those departments don't really have much to say about the contracts that are signed. So I hope that next year this system of stable growth will have been implemented. If we think about who we are as a company, we're a large, stable company that we want employees to be with us for many, many years. And so here we have to look for those values which are the most important for us and for our employees, to make sure that this is a mutually beneficial situation for the employees. We want to be able to utilize their full potential. And this certainly depends to a large extent on how we organize their work. And so we'll arrive at that in terms of what type of result has been generated by each department. Of course, the sales department is the one that's responsible for doing the top line, but what they deliver can be redistributed, but it has to be tracked, and measured. So, and within a structure of some 23,000 employees, we've got a strategy and an idea in terms of how we want to phase this in next year. So we're talking about this with my colleagues, but one of the key elements, as I mentioned, for us this year, next year, is to eliminate inefficiencies and to make sure that this amount of traffic, the amount of areas, it's not so much the motivation system itself that's responsible for that, but we're thinking about the potential that's not been tapped into. And so this is something that we're focusing on to make sure that we're going to be able to complete by next year. And so we could limit then those inefficiencies, and then we'll be able to introduce a safe system for the company. And this would enable us to make sure that employees want to stay with the company. Of course, we're aware of the challenges flowing from the marketplace. So we're at the end of the low salary period in Poland. And so we know what the expectations are, what the market is. And so this is an element that we're monitoring quite closely. So next year we'll be in a totally different framework of how we manage resources. Right now, we've been focusing on processes in order to be able to rationalize these areas. And so we're focusing on, consolidation of terminals, building a division, intermodal division, a maintenance division within these processes. And this is something that should release resources, redundant resources. And so basically, we should achieve synergies, savings as a result of these processes. Two more questions. So if we look at the previous conference, you had shown an updated budget of PPLK, and so it's now the end of the year. What is the outlook for aggregates next year? As I mentioned, the outlook is positive, as we see from these talks. Nothing has changed, really. So the utilization of EU funds has to be completed. It's not a matter of whether this will be done, but by when it will be done. So the directorate of PLK is the recipient of this question, not us. So we met them on aggregate last year. We were thinking about what the market looks like. So today we're at a decent level in terms of our freight handling of aggregates. So with the exception of 2018, it's similar to what we did previously. It's a large quantity. It should be much larger. We have the capacity to do more as a result of investments made. And we'd like to do more. And so we're talking about that on an ongoing basis. We're updating our situation based on direct meetings with people responsible for aggregates. And so we're working with PLK. So we're listening to what's happening there. And nothing suggests that the amount of freight would be lower this year than last year. It's a matter of how quickly this will grow. So if we think about releasing volumes, well, this is something that didn't happen in Q3. If we look at the timeline in 2020, based on your current talks, do you think this will take place in Q1, Q2, or not until Q3? As I mentioned, the amount of freight of aggregates is pretty decent. We're carrying more, a little bit more than we did in 2017, much more than we did 3 or 4 years previously. If we compare this to last year, then we're down, but it's not significantly down. So if we look at the end of October, beginning of November, these were decent levels of aggregate traffic. So in the winter period, we always have some constriction and in Q1, but next year we are talking, perhaps Grzegorz has more information because he's meeting more frequently with our customers and he could say something about that subject. But there is an expectation on our part that this freight traffic will be done. So this work is being done, and I think that we'll be able to complete this. Perhaps I'll pose the question differently. Do you preclude a situation in which aggregates traffic in terms of volume would be flat? As I mentioned, we're wrapping up our business plan. We're taking a realistic view, but we're trying to do this objectively. So we're not only thinking about scenarios that could take place, because we could have millions of scenarios. We're trying to think about what's the most reasonable. We're not entirely ready because we haven't embraced the business plan. So it's in the process of being finalized. As I said, if I remember correctly, some 87 billion zlotys has been earmarked for road and rail investments up until the end of 2022. And so this is money that has to be spent. I can't imagine that this money would not be spent. So you could respond to this question on your own, when the money will be spent. And of course, the Polish government, the Polish state, you could imagine, wouldn't spend the money and want to utilize this funding source. It's unlikely, but it could happen. So basically, the ambition of the management at PLK is to spend that money. The question is more or less picking the timing. Is it June or May or November, July, August, whatever? This is more a matter of guessing. I'm quite confident that the money will be spent, but exactly when it will be spent, perhaps Grzegorz could add a couple words of color on this subject. It's very difficult for me to make any remarks on that subject. I understand that we're talking about the results of Q3 2019, and what's going to happen next year is something that we can't really respond to specifically today. I'm perhaps less of an optimist than the CEO. We all know that this money will be spent, and you're aware of that. But I don't think anybody in this room is able to respond to the question of when that will take place. If I were able to guess the future, I would be in a different capacity than I am here today. So if we talk to our customers directly and they're not able to declare specifically what volume of traffic they want to, freight traffic they want to generate in a specific month, that doesn't mean that the freight won't be delivered. It's just a matter of time shifts. So in the design and build format, once those tenders are, the decisions are made in those tenders, then we'll be able to move on. So if we think about various construction sites, for example, road works, so there's probably going to be a time lag of 6 months. Okay, thank you. My last question, in terms of your plans for 2020, could you give me some words of commentary about our CapEx? After 9 months of the year, we've spent some 800 million, and the EBITDA forecast, you've reported recently the newest one for this year. And so net debt has grown by nearly 200 million quarter on quarter. Do you think that the CapEx is perhaps not a little too high, having in mind the modernization of rail cars, rail wagons? Perhaps I'll begin, and then Grzegorz could add something here. I've mentioned that some of the neglect or the ceasing and desisting from certain investments or not doing investments in certain products, having in mind the market situation. Well, this means that since these decisions weren't made, that in Intermodal we're not able to do as much transport as we could do had we had the proper resources to facilitate that type of cargo traffic. So this is an irresponsible approach to the development of the company and the actions that were pursued in terms of what the competition was doing as well. So from the very from the very get-go, we looked at our capacity, our investment capacity, and we had to have in mind the needs that the market was putting forward. And so if we look at the alignment of our rolling stock, well, this means that the costs of transport are higher. So the new technical engineering solutions are more effective, cost-effective on a unit basis. Perhaps this is more of a philosophical approach because it has to be a broader approach. And this means that it wasn't really possible to generate higher profits for the owner, for the shareholders. So basically, we'd like to be able to do those things that will contribute to value creation. So shareholder value. Today, our EBITDA coming in at roughly 1.9 billion plus over the last 2 years is a decent value. Thanks to the efforts we've taken, as I mentioned, one of the key factors we see in the freight process is to have the most rational rolling stock, most effective rolling stock. So we have to compete in terms of innovativeness and the unit cost effectiveness. So this is something where cost effectiveness improvements are in line with what the market wants. And so basically the shortage of intermodal transport is one of the shortcomings of the previous period. Certainly our results would have been much better had we had a better, more responsible policy pursued in the past, and certainly in terms of professionalism. And so we're trying to professionalize everything we do. Of course, we calculate risk because risk is part of business. But we're trying to mitigate that risk. Of course, you can't mitigate it all the way down to zero. We have a 4.5% profitability, net profitability in Q3, 2.7 year to date. This is a decent level of profitability. So if we look at our CapEx and the EBITDA we've generated, our goal is to balance them over the upcoming period, year to 2 years. So we have to have the ability to expand in key areas. And we have to make up for some of the shortcomings we had in the past, which compromised our competitiveness. And this is something that we're doing through these efforts we've undertaken in the last few months. And that's why we have positive results, robust performance that could have been even better, these results. But one of the key pillars we have is to balance our CapEx with the excess that we have elsewhere. Of the 300 million, I don't remember the number. If you look at wagons, rail wagons, what extent of that was spent for the rolling segment in intermodal? I don't remember exactly, but I can say that we signed a contract to purchase 1,220 intermodal rail wagons, and so we've already received the first wagons in November. They will continue to be delivered in November, December. So I don't remember right now in terms of the breakdown between the purchase of multi-system locomotives. I think we've purchased 3 this year, and another 5 will be purchased. So there's a big tender. I can't give you specific figures, but I can tell that in terms of the physical assets, these efforts are being taken. Then the work to modernize rail wagons to ensure that we can handle mass bulk products. But as I said, the intermodal trains were very important to us, and this is something that was missing. Okay. I'm from PKO. I wanted to ask about the minimum wage hike. What impact will it have on you, and if so, what type of impact? If we look at the minimum wage, this applies to some wage components. Generally speaking, we don't hire people at that level. We think that at the group level, we believe that the incremental cost would be no larger than 10 million zlotys. If we look at some of the inefficiencies that we want to offset, and so if this appears, we want to be able to mitigate this, and in subsequent years to a greater extent. What do you anticipate from your cooperation with the Polish oil and gas company? And who's going to cover the CapEx in terms of the rolling stock needed for transporting liquid fuels? So the first train between Świnoujście and Oświęcim should be chartered next year, originated next year. So this is something that's potentially quite good to us. Talks are underway. I'm not able to say. We're talking about a single train per week, so this is a figure that's too small for us to take that risk on our own. But we'll talk about this and thinking about it depending on the size of the contract. So there's a pool of rolling stock that can be utilized for this purpose from the Polish Development Fund. So we're talking quite extensively. Basically, we're offering this train service. It's a pilot program on a footing that makes it profitable. But the quantity of traffic could be quite impressive. Also, if you look at the international transport, we were talking with people from Ukraine last week. I had the pleasure of being in Ukraine, and Ukraine is also thinking about its energy independence. And so this sort of trans-border, trans-frontier cooperation is quite important. So some of the legal regulations are quite important. So sometimes we see some regulations that forbid the transport of this type of fuel by train and by cars. So there's some things to be considered here. We want to be a key player in this area, and that's one of the reasons why we're making investments in the factory of rail wagons. And this is one of the areas where we could see some interest in the rail wagons as well as the containers. And so the pilot will be done in Q1. So this train will be profitable to us to originate it. And then later it will depend on the size of the need. So the pilot will come to an end at the end of Q1, and then you can think about the work needed to continue that in subsequent quarters. Well, it's an annual period. It's not a single train, but every week there'll be a new train. So we have to check the ability, because there's some shortage of infrastructure on the rail side and in the port in Świnoujście in order to be able to transport that product, because we're finding some rail track infrastructure missing. So this pilot is something that will function over the year, but we have to think about the ability to acquire such containers, because sometimes transportation is forbidden, and so we're limited by the quantity of these type of rail wagons that are available. So we have to think about where we can get those rail wagons and to have that product in place. But we do have this in our initial offering. We've got price calculations for this product. So we can say that the origination of this freight traffic handling next year is not under any danger. So a long-term contract should be signed if both parties believe this to be advisable. And so the decision will be made jointly about the size and extent of these operations. So the market is very big, it's enormous, and so we want to participate in this from the very get-go. So are there European Union limitations as well? Based on what I know, not. What about rates for access to infrastructure? Will they be flat, increases? Based on what I remember, the increases are +0 nominally. Perhaps it's maybe 1%. I mean, the information was reported. I just don't remember off the top of my head. And then the project with Greenbrier in Yarby. So this is an important project for us to build wagons, also with PG and with the Polish Oil and Gas Company. We're talking about this jointly, and we're determined to execute this program. So the ownership structure is something that we'll talk about. But in terms of the project, there's no threat. It's not at risk, but we're working on ironing out the details. If we look at the Romanian companies, could you give us some operating stats? Some things I know, but colloquially speaking, I can't talk about everything. Perhaps I can ask my colleagues what we're able to report. Market share is probably not secret. So they have a market share of like 4 to 5% at the current point in time. I'm not sure that I can actually report their top line and EBITDA. I'm not sure if I can give that information. I'll have to check that. My final question. How long do you think that there will be limited access for ArcelorMittal? Perhaps my colleague should speak to that issue. I know, but perhaps my colleague should speak to it. To what extent do we expect? For how long? You've seen the information from Mittal. It's complicated. We had information that the furnace was shut down. Then we received information that it's been pushed back. It won't be turned off, shut down up until the end of the year. And then we got the information that it was shut down on a specific date in November based on what Mittal has communicated less formally. This is something that will happen for a period in excess of 6 months next year. So we should anticipate that the period should be even more protracted. Thank you. So we're going to be at your disposal after the session. We have a question from an individual investor. We have two questions, in fact. The first one is about compensation for energy price hikes. And the second question is to the management team about what you would do to raise the share price under the share buyback program. So the idea was for what happened in the first half of the year. That was already paid, and we don't anticipate for next year that there are going to be major changes. So the excise tax and basically the level will be reduced to the level from 2018, but we don't anticipate any type of budget there. So if we look at the second question, I think in my original statement, I tried to reflect on that. I tried to say quite explicitly that the capitalization of the company compared to the strength of the organization, well, the relationship is inadequate. The amount of cash we have on our account, the share price, the accounting valuation of the company is substantially higher because we have rolling stock that's much more expensive than what we have in terms of the accounting value, receivables, which is basically cash. So if we look at our current assets, you can say that cash is more or less equivalent to our market price. So you could say that the value of the company is equal to the amount of cash on account. Of course, it's not my role to speak about this. I have meetings with investors. I have some talks with investors today. And as I said at the beginning, quite clearly, we'd like to communicate and be transparent in our strategic activities. As I've said previously, the market, it grows, constricts, changes. It's always nice to be on a market that's growing very fast and generates a lot of profits. Sometimes it's more difficult because you face a variety of challenges. So in recent periods, we've demonstrated that this organization is very flexible and adapts itself to the market situation and context. And so we have a strategy of how to build ourselves as a strong operator. And we want to be a logistics operator internationally. And so this is something that's quite important because this builds our value. In terms of our market value, the products we have, it makes us much more valuable to the customers, aware of our public demands. And we're building the awareness of logistics amongst people and providing that logistics support. And this should continue to support our sustainable development and to ensure that we'll be able to accomplish the results we want to achieve in terms of being a comprehensive logistics operator. And we'd like to discount the full range of economic growth. So ports, marine ports are very important to us. So investments in ports and the logistics support is quite important here because we're expanding infrastructure, air infrastructure, road infrastructure, rail infrastructure, port infrastructure, and then the terminals. And this is something that should enable us to ensure that the flow capacity is sufficiently amplified. This is what we're doing. Of course, port investments aren't just for a 1 or 2 or 3 year period. These are plans strewn over several years in terms of building ports in Gdynia, because the decision has been made to build an open port in Gdynia. This would generate a lot of cargo for us. And so the decision to expand the port in Gdańsk is good news for us, especially as rail infrastructure is built up around these ports. So more or less 20% of all cargo is handled through rail. But as you expand rail infrastructure, we want to bump this up to 40% or even above. So if we look at the rail investments just next to the ports, we'll be able to increase the likelihood of being able to move those goods by rail than up until now. And so these are efforts that will boost value. And then we have internal talks, and we have some ideas about how this could be accomplished, but I could speak generally. We're talking about a large number of companies, like the PGE or Polish, or companies controlled by the state. We've got EBITDA companies. I don't know if I've talked about Dino. Some of you smiled when I mentioned Dino. They've got 900 several stores on the local neighborhoods, and all of these stores taken together have a market valuation that's bigger than the value of half of the power sector. So it's your decision whether or not the 900 stores, could we function without those 900 stores? Yes or no? And could we function without the Polish power sector? So it's up to you. This is information for you to think about. Of course, this is something we're talking about. I was on your side of the table. I had the pleasure of working in the financial sector as an advisor. So I know your seat. I'm also a co-shareholder, so I sort of feel both sides of the table. And so I'm just speaking to how things operate. So we're working very strongly in order to show the real value. It's not our role to make a valuation of a company and what the share price should be. This is your role. That's the role of the marketplace. But above all, we want to show what's happening. So there was a question. I'm here to speak to that. The gentleman in the room wasn't using his microphone, so So you're asking about a question. You're asking a question about what sort of things we want to do. So I was trying to respond to the question. So once we have everything embraced, then we'll pass on that information to you. But this is one of the things that we're considering, and we're taking a lot of effort to ensure that the share price fully reflects the strength of the organization we have the pleasure to manage. So thank you very much. So we invite you now to join us for some refreshments at this time. So thank you very much for your attendance, ladies and gentlemen.